2026 just got started, and today I'm coming to you with an update on my investments into VOO and FXAIX. These two positions combined have generated me about $65,000 in profit just from being invested in 2025. The S&P 500 hit all-time highs 39 times and finished the year up about 17%, marking the third straight year that we've ended with double-digit returns. And in 2026, we've already had one record close on January the 6th. And because I am a long-term investor, I don't panic. This is one that I don't have to overthink. It's a buy and hold forever investment, so I'm able to reap the benefits. Here's a look at my current position when it comes to FXAIX. I have 749 shares, and I'm currently up almost 51%. The current value of this position is $180,000, and I have a gain of $60,629. And when it comes to VOO, I have a little over 20 shares. I'm up about 46%. The value of this position is about $12,000, and I have a total gain of $4,028. And yes, when it comes to both of these positions, I receive a quarterly dividend, which I will get into in a little bit. All of my dividends received were fully reinvested using the power of the DRIP dividend reinvestment plan. But let me touch on, why do I have both of these investments in my portfolio if they both track the S&P? Answer down to tax efficiency and my investing strategy. Both of these funds track the 500 largest companies in the US, and you'll be getting about 40% exposure to these top 10 holdings, which are NVDA, Apple, Microsoft, Amazon, Broadcom, Google, Meta, Tesla, and Berkshire Hathaway. Both funds are going to give you very similar long-term returns. So the difference is not performance, it's structure. I'm doing VOO in my taxable brokerage account and FXAIX in an IRA at Fidelity for retirement. So when it comes to these two funds, it's not an either or, which is best. For me, it was about putting the right investment in the right account. VOO, Vanguard S&P 500 ETF, exchange traded funds. They are generally more tax efficient. They're structured in a way that usually leads to fewer capital gain distributions and less surprises when it comes to taxes over time. So I thought that this would be a good fit in my accounts outside of retirement. I'm not trading VOO. I hold this one for the long term, just like my FXAIX. SPY is my go-to when it comes to trading the S&P 500. And looking back to my update that I shared last January, I was at 18.3 shares with a gain of about 26.8%. And now I've added about 2 shares to my portfolio over the year, and I'm up 46%. Just by holding, I've decided to build into some other positions, which I'll touch on later on. But while I was in the building phase, I'm sure that I went through just as many all-time highs like we had in 2025. So you have to keep going when it comes to your investing. Don't get turned off by all-time highs, because you know what happens? They come around again. So if you haven't already, give this video a thumbs up. Let me know in the comments, are you holding VOO, SPYM, FXAIX, SWPPX? How are you getting exposure to the S&P 500 in your portfolios? Okay, so now back to FXAIX, which is going to have a lower share price than VOO. VOO's current share price, $633.84. FXAIX is $240.41. So I'm holding a much larger position when it comes to FXAIX in my IRA, where tax efficiency really doesn't matter as much. Dividends, capital gains, none of it is a concern right now. That's why FXAIX works perfectly over there. I'm not trading, I'm just buying and holding and letting this grow steadily year after year. I've added about 9 shares since my update last January, and at that time I was up about 28%, while I'm up about 51% now. So this fund just trades daily, not throughout the day like VOO, which moves just like a stock, giving me the same results, just in a different package. Now, let's go over a few other differences when it comes to these two funds. Back to dividends. FXAIX has a dividend yield of 1.11%, nearly identical to VOO at 1.12%. I'm going to run through my dividends received from both of these positions, and all of it was reinvested, buying more shares, keeping me on track for long-term growth. In December, I received $541.68. October, $500.64. July, $485.29. And back in April, $439.40 for a total of about $1,967. And here's a quick look at my dividends received when it comes to VOO, about $138 in 2025. So I think that these are both excellent investments. One isn't better than the other. I chose, based on the account and my personal goals, to have investments for retirement as well as in a taxable account. The real mistake that I don't want you to make is not investing at all. Do your research, find the fund that fits your goals and strategy, and stay invested so that you can allow this to build for retirement or whatever your goals are. Looking back all the way to 1986, there's only been a 3-year stretch of a decline when it comes to the S&P 500. So we have to be ready for that and make sure to adjust our portfolio accordingly. But we can also see from this time frame and looking back even further that it always recovers. And this is a way for you to achieve steady growth through the share appreciation as well as those quarterly dividends, which will allow you to build up your portfolio. Make sure you're staying invested so that you can capture these gains and only tap into your portfolios when you are truly ready. Make sure you have your emergency funds, and we're not looking at our portfolios for anything other than its intended purpose, whatever that may be for you. What am I doing going forward into 2026? I'm holding. These are core positions that I built out. I'm going to allow those dividends to continue to be reinvested while I'm focused on building up other positions like SPMO, which has a 3-year annualized rate of return of nearly 30%, and FSPGX, which has a 3-year average return of a little over 31%, as compared to the S&P 500, which is at about 23%. I'm striving for more growth-focused investments in my portfolio, and those are just 2 examples. One other key difference I think I forgot to touch on is VOO's expense ratio is 0.03%, while FXAIX is even lower at 0.015%. Another thing that I love about both of these investments is very low fees that will not be eating away at your returns, especially when you are holding for the long term like I am. So make sure to leave me some comments. Let me know your thoughts. Let me know what you're holding in your portfolio. If I answered all of your questions, let me know that. Make sure to give this video a thumbs up, subscribe, and hit that notification bell so you can keep up with all of my videos and live streams. Ready to open a new account? Use my referral link for MooMoo, which will be in the description and pinned in the comments. And consider joining channel membership. Thanks for watching. Okay, bye.